Do you want to earn monthly passive income? Then this is the right video for you. Hi guys, welcome back. It's BD Investing, aka Canadian Stocks. Using high-yield stocks or ETF are a great way to earn monthly passive income. But today we are only going to be talking about buying an ETF. The three ETFs are VDY, HYLD, and HDIV. VDY, Vanguard Canadian High Dividend Yield ETF, is an exchange-traded fund that aims to track the performance of Canadian high dividend yield stocks. This index is made up of a diverse group of dividend-paying Canadian companies that are expected to have higher dividend yields compared to the overall market. Let's take a look at the portfolio. As you can see, their portfolio is heavily into finance stocks like the banks and a lot of exposure to energy and oil stocks. These are their holdings. As you can see, its largest holding is RBC, TD, and Enbridge. They also have BCE, which is Bell Canada. These are all blue-chip Canadian stocks, which make this ETF fairly safe. With a yield of 4.15%, it pays 14 cents per month. It has a fee of 0.22%. But $1,000 invested into this would give you $3.45 a month or $41.50 a year. In terms of performance, it keeps up with the TSX benchmark, but beats the market if you add dividends. The next stock we will be talking about is HYLD, Hamilton Enhanced US Covered Call ETF. First of all, let me mention this ETF gives a yield of 14.25%. That means on $1,000 invested, you'll make $142.50 a year. That's $11.87 a month. HYLD seeks to provide investors with a combination of income and potential capital appreciation. It does this by investing in a diversified portfolio of U.S. stocks and selling call options on those stocks. The call options generate income, which is distributed to investors in the form of dividends. The fund is managed by Hamilton Lane Advisors. Think of this as the S&P 500 ETF with a high yield. It has diversified blue-chip U.S. equity exposure. Let's take a look at what this ETF is holding. It has almost the same performance as the S&P 500 and close to the same volatility with an obviously higher yield. Its major sector exposure is 29% in tech, 17% in healthcare, and 7.6% in consumer discretionary. As for its holdings, it holds a bunch of other covered call ETFs. Let's take a look at the first one, Global X Nasdaq 100 Covered Call ETF. Its top holdings consists of Microsoft, Apple, and Amazon. That looks about right. Oh yeah, the distribution is monthly, which is great for passive income, and I would say this ETF is risky since it has a lot of exposure to tech stocks. The next stock we will be talking about is HDIV, Hamilton Enhanced Multi-Sector Covered Call ET. This ETF gives a yield of 9.68%. That means on $1,000 invested, you'll make $96.80 a year. That's $8.06 a month, and yes, the distribution is monthly. HYLD seeks to provide investors with a combination of income and potential capital appreciation. It does this by investing in a diversified portfolio of Canadian stocks and selling call options on those stocks. The portfolio consists of primarily sector covered call ETFs with a sector mix broadly similar to the S&P/TSX 60. The fund is managed by Hamilton Lane Advisors. Think of this as the TSX 60 ETF with a high yield. It has diversified Canadian equity exposure. Let's take a look at what this ETF is holding. HDIV has outperformed the S&P/TSX 60 by 6.45% since inception. Its major sector exposure is 30.7% in finance, 17.4% energy, 13.7% in utilities, and 13.9% in gold, and 13.3% healthcare, and 10.9% tech. It's very well diversified. As for its holdings, it holds a bunch of other covered call ETFs. Let's take a look at the first one, CI Energy Giants Covered Call ETF. Its top holdings consists of Occidental Petrol, Devon Energy, and Canadian Natural Resources. So it looks like it has US and Canadian exposure. Makes sense why it was outperforming the TSX. These high-yield ETFs are very powerful when it comes to passive investing and can really boost your portfolio. I hope you guys liked the video. Make sure you subscribe to my YouTube channel.